Hey, what's up, everybody? Welcome back. Xavier here with the charts. We're just touching back on the portfolio for the week. We're almost nearing the end of the first month of January. It's the 23rd. Figured I'd do a little bit of an update to see what I've been doing. I did deploy a little bit of the capital that I had basically in savings. I did make an adjustment. I basically sold out of play. I took profits in play. I kind of had the feeling that in terms of, so I took profits today, and I kind of had the feeling that we weren't going to get the kind of push in the restaurant industry. Dave and Buster's, in terms of their the quarter that they had was okay, not great, and I particularly don't perceive them bringing back the dividend anytime soon. And I think we're coming up on a little bit of a resistance here, basically at about 39. So I ended up taking profits and then, of course, redeploying those profits into someplace else. I had about a couple thousand in it. I was long basically from, I think, about 23, ended up selling at 33 and change. And I was basically happy. Again, I had purchased it way down here initially, sold it on the initial push into the mid 20s, had repurchased it back down here into the 20s, and basically sold it up into the 30s. So I was quite fine with the profits that I had taken in Dave & Buster's, was more than happy with it. Of course, I am still holding Wells Fargo. I will be adding more onto the pullback. I'm waiting to see if we're going to retest 30s. We didn't hold the we did not hold a 20-day, basically gap down, and we might see a little bit of a pullback. And of course, I'm fine. Wells Fargo for me is a particular stock that I will more than likely hold for the next couple of years, as I do believe, based on the previous history, that the stock will reinitiate the with buybacks, and of course bringing back that juicy dividend. Currently they're only paying 10 cents, but of course I got long down here and I basically been riding up. Similarly, of course, with ExxonMobil, I did add a little bit more to ExxonMobil today on the pullback, looking to see if we're going to retest those 46s. We could come all the way back down into the 40s, and I'm okay with that. This is another position that I did buy down here in the low 30s. I think I'm long at about 32 or 33. And of course, I'm adding more on significant pullbacks. And of course, we did see a little bit of a pullback. Let me see, how much was it? About almost 6%. So I was okay. I really didn't add a whole bunch. I think I bought 2 or maybe 3 shares. If I see a significant pullback, of course, way back down here into the low 40s, I would definitely add more into the position, just so that I'm dollar cost averaging in more favorable prices, where I'm basically looking to be long for a couple of years. I do think, of course, oil is basically here to stay, regardless of what they say about renewable energy. Although, of course, I do have BEP as one of my sources of renewable. I did sell out half of my position here, ended up rebuying it back down here on the test on the moving average. And then, of course, subsequently, we did rally back up. I've got, I think, about 1,200 in there as well. And of course, as well as stocks like SO, Southern, which is also a renewable energy company that focuses on electricity. It does pay a dividend, which is why I got it. Overwhelmingly, my portfolio revolves around passive income via dividends. And so for the month, as you can see, we are almost at the 50K mark. We still have about 3,300 to deploy. That will sit there unless I see something that I overwhelmingly like, or I see a pullback in a stock that's significant enough for me to deploy some capital. That otherwise, my goal was to keep about 10 to 15% in cash. I did deploy a little bit, which we'll go over. For the month, as you can see, we've taken in 265 in terms of dividends. And for the month, we're up about 28.50, which just roughly about 6%. The goal for this year, like I've said previously, is to add about $500 worth of income from just solely from dividends. So typically I track my dividends right here on trackyourdividends.com. It's free to use. It basically shows, this is basically my current portfolio. As you can see right here, we are roughly at 6.8% with a yield on cost of 7.6%. So basically most of the stocks I got fairly cheap, so that my yield is fairly high in terms of what it cost me, but overall the portfolio is sitting at about 6.8% in terms of dividend. And then we've basically made about 4,900 in terms of profit for the portfolio. In terms of the income, we're currently sitting, I believe, at about 3,000. My goal is to, of course, get this to 6,000, which would put me at the 500 a month. So basically, we're looking to allocate about another 40,000 in portfolio value, so that we can make use of wherever I'm going to deploy that, whether it's in food stocks, which I did add. As you can see here, I did add some BGS. I do feel that food prices are going to be going up, especially with all of the money printing that is going on, with the supply chain crunch that is going on. As I've been paying attention, there's a lot of different countries, especially in China, where they're not going to be sending out as much food in terms of buying and selling from different countries, especially when it comes to things like wheat and soybeans, etc. Initially, we did see some supply chain crunch. I mean, I pay attention to the cost of foods at the supermarket that I go to that is near me, and I've seen the prices of cereal boxes and meat and chicken start to go up. I think it's like $7, almost $8, depending upon the cereal brand. So we could see prices start to go up, which is why I added and have been adding to things like FLO, which does, for the most part, pay a little bit of a dividend. If you look at it, for the most part, it does particularly trade sideways, but I mostly kept it for the little bit of a dividend. And I also added stocks like BGS, which is a food stock, bought it down here in the low 26s, and we're currently sitting at about $30. It pays about 6.5% in terms of the dividend, about 47%. We are seeing a bounce in the stock. And if you actually look back, we're kind of at a good spot. I wish I would, of course, would have bought it earlier on at the beginning, but it kind of is what it is currently. These are basically my food stocks that I think asset prices are going to go up. So things like food, oil, right? ExxonMobil, I believe at one point hit like 52, almost 52. We're seeing more of a push towards renewables, but I think oil and gas, as we're entering more into a recession, depression. And if you recall, like during Obama's presidency, that the price of oil and gas spiked, food prices went up, the price of bread basically doubled. Excuse me, oil went to like $5 a gallon. And so I'm thinking that we're going to see that during the next couple of years, where oil prices will go up, natural gas prices will go up. And of course, despite the push for renewables, they're by no means there, although the setup is there. In any event, we're basically hedged for either one of the directions that they're choosing to go. So I basically keep track of all of my dividends here. I do have a little bit in real estate. I did add back some in Coca-Cola. So looking back where I did add some money, well, let's go down to the dividend portion. Again, overwhelmingly all the stocks that I have in my portfolio are typically dividend paying stocks. As you can see, every one of these stocks pays a dividend. Like I say, if it doesn't make dollars, it doesn't make sense. I did pull out of things of like Pfizer. I overwhelmingly, as I did read the studies, I did pay attention to insider selling from the CEO. And as you can see, despite the stock and the company supposedly being utilized for the vaccine, we are literally seeing no movement within the stock. And so I would rather wait for Pfizer perhaps to come down here into the low, maybe 32s, 33s, if I was actually going to buy it, where you can see this is basically more on the low end to get a little bit more of a yield out of the stock that has basically been trading sideways. As you can see, every time the stock looked like it was going to benefit from the vaccine, you would imagine that the company should be doing well and basically going to rake it in, because all these different countries are going to need the vaccine. Not really seeing that in every opportunity that the stock has had to break out, it immediately gets sold off. I think it's also similar with Moderna. Moderna, of course, sliding off fairly hard, making a little bit of a comeback. But I've stayed away from this stock after I sold it. I originally had bought it way down here into the teens, sold it at about 50 and 60, and I never looked back at the stock in terms of investing because it seemed more like a pump and dump. Moderna has never brought a vaccine, brought a medication to market, and so I was very highly skeptical. What, in my opinion, Moderna is like a pump and dump, which is why you saw stocks like Johnson & Johnson and Merck, Pfizer literally not move, even though all of these stocks were basically involved with the the Warp Speed program that Trump had initiated back during his presidency. But really the only company that really got any sort of movement was a no-name brand company that's never bought a stock, that's never bought a medication to market, Moderna. So I took my profits and basically never looked back at the company. And of course, I've read stuff about the Moderna vaccine, which of course doesn't lead me to have much hope for individuals who are thinking that the Moderna vaccine is going to do what it's supposed to do. But we're not going to get into that with this video. And so basically where I've deployed some extra cash, which was in stocks like BGS, for the dividend, we're currently up 10%. I did buy IBM on the pullback, primarily for the dividend. It could be a short-term play. I've heard and I've read a little bit that IBM is basically trying to shake up their company. And they've said that for 2021, that they're looking basically to make some money. And so on today's pullback, I decided to buy IBM. For the most part over the past from April has basically traded in this little bit of a channel between what looks like 116 and 132. 132 looks like the breakout. You can see it right here on the other end of the chart, basically back in 2019. And so it's kind of ironic that as the stock looked like it was just about to break out, it looked like it was channeling sideways. We started to see a little bit of volume come in, and then of course the news was that it didn't do as well as the street had expected. Even though they did miss, of course, the company always makes money. They make millions and millions of dollars. But for looking back at the past couple of earnings, it looks like they're missing by less. So they could be on track, as they say, for 2021. Maybe the stock will swing back up. I basically purchased it, one, for the dividend. Right? It seemed like a fairly good move. It looked like it was going to, with the amount of money that I invested, it looked like it's going to bring me about, I think about $5. Let me just do the math real quick. So we put in 1,200, and I basically got in at 118.50. And so that gave me about 10 shares, and it's 163 per share. That's times 1.63. So that basically generates me $16.50 per quarter. If I just wanted to see what that was, because I look at it from a monthly perspective, so that brought me about $4 worth of income. And that's basically how I look at most of my purchases. Is I keep my portfolio diversified, but I want to see how much income it's going to give me, basically on a monthly perspective. As I said before, that my goal is to get about at least 500 for this year in terms of dividend. I'm not really worried too much about capital gains, as most of these stocks are typically designed to be held, unless of course it's in the risk portion of my portfolio, which is basically where I usually put my buys and sells for either for swing trading or for stocks that I think will have a short-term boost to the upside, or maybe a particular stock that I think is going to do well over the next year. And so it goes into the risk portion. I take those profits out, I reallocate those profits back into dividend paying stocks. So now that my profits are now earning me dividends, and then I redeploy the principal back into a different stock. So like I said, I sold out of Dave & Buster's, and I believe in my last video I talked about BABA. So I bought Alibaba on the news. Of course, it was sold out. People were worried. Was Donald Trump going to get all these stocks delisted? Of course, none of that happened. It was just all nonsense. Excuse me. And then, of course, on the news of where is Jack Ma. So I basically took about an 18 or so hundred position. I'm going to add another 700 to 1,000. I'm hoping that we get a little bit of a pullback into the 250s so that I can add some more. It could come all the way and retest 240s, as you can see right here. That basically the stock recoiled. It basically traded sideways before it moved to the upside, and it basically did the exact same thing here on the downside before it traded sideways, built up a little bit of momentum, and then of course traded higher to the upside, coming all the way up to almost 270. So I bought in here, I think at about 230s, let me see, and that was added to the risk portion of my portfolio. As you can see, currently have 2,000 invested with already 184 in profits. And like I said, this is basically what I do. I look for plays where I'm going to make 15, 20, 30, 50% on that money, basically take that money out, throw those profits into my dividend portions, and then reallocate into different areas. As you can see, where I've been in stocks like Switchback, Palantir, I wish I would have held, but you never know what's going to happen. Neo, Chewy. So I basically made money in all of these stocks and then move those profits over. Still holding on to JetBlue. JetBlue is trading a little bit sideways, as you can see over the past couple, basically since November of 2020, the stock's been trading basically in a channel, I'd say between 14 and 16. And I don't think JetBlue or the airlines are basically going to break out to the upside until, at the very least for JetBlue, until we hear that individuals do not need to quarantine when we're here, and perhaps they only need to, for example, like either have the vaccine or test negative for the virus upon arrival, and then maybe they have to do like another swab while they're here, and then within the next 3 or 4 days they have to test negative again, and so that they can continue to move around within the city. Otherwise, most of JetBlue's, in terms of, especially here in New York, JetBlue is a airline based here in New York, and so if there's no tourism here in New York, JetBlue is basically not going to benefit. So the only time that I'm really excuse me, buying into JetBlue is if we see a pullback to roughly about the $14, where it's basically channeling between 14 and 16. And so if it comes down to 14s, I'll buy a little bit more. I'll buy maybe $60 worth instead of buying it up here. I'm not waiting. I'm going to wait for a breakout above 16. More than likely, we'll see a breakout with some pretty good volume. And then, of course, JetBlue will retest into the 20s. And at that point, I will look to sell it. So if I can mostly gather most of my position here at about 14.50 and sell it back to where it was, we could look at about a 50% return on this particular trade. And that's basically what I'm looking for in JetBlue. JetBlue is by no means a buy and hold into, the next year. For me, I'm looking forward to basically retest $20, $21 and then basically get out of the stock. As you can see, JetBlue for the most part has held above 16. If you look through basically 2018, 19, and into 20, where the stock basically bounced off of 16, which is why 16 is such an important resistance for it to break on volume. And then finally, the stock will trade to the upside as it will basically continue with momentum. But we need the news of one, more people getting the vaccine, two, changes to quarantining or having individuals be tourism. Basically, we need to see tourism come back to New York, and I'm not quite sure when that's going to happen, but that's basically the news that I'm looking for. Excuse me. Until then, I'll be making sure to try to purchase the stock as cheap as possible, typically when it comes to about that $14 level, which is where I still have JetBlue in my portfolio. We've got about 1,200 invested. I did take some profits as I had bought it initially a little bit lower, took profits on the run up, and then basically just waiting to see what happens with the stock currently. Like I said, what I'm doing with BABA, same thing. Norwegian is basically the same thing. Norwegian trading slightly to the upside. I did sell out of a little bit initially, bought it down here, took about 1,000 in profits, and I'm basically adding more. As you can see, the stock is trading and basically bouncing at what looks like about $23. We have a long way to go, but again, without the vaccine being distributed, without the narrative basically changing in terms of constantly talking about positive cases, companies like Norwegian are basically going to channel sideways. And as long as they have cash or can get some sort of a bailout, they'll remain at their levels. But currently, we're going to have to wait and see. Unless these companies can basically think of another way to utilize their ships, maybe for like staycations or utilizing them for restaurants, something. These companies are basically going to be bleeding cash, and that's why I haven't added too much to my Norwegian position, sitting at about 1550. The stock that I did add to in terms of having a little bit of money into cloud, which was basically Salesforce. I wish I had bought Salesforce off of the bounce at about $210. You can see previously that's basically where the stock had gapped higher. You can see right here we traded sideways with basically a triple touch to the 210, finally with a breakout on volume. As you can see that the breakout right here was on very strong volume. You can see it's almost triple the volume of all the other days, and then of course it's a subsequent gap up. So you literally had one day to decide if you were going to pull the trigger or not on this stock. Otherwise you missed the play. And it basically went from about 225 all the way up into 280s. You ended there for a little while. You could have taken profits. This was right around the time period that Salesforce bought Work. They bought Slate. They bought Slack Technologies, and it's basically been trading sideways since then. So I basically decided to CRM Salesforce, I do believe, is looking to break out. As you can see right here, 230 is basically the resistance now, as it was the support. You should be able to see that right here, where we came down a couple of times around that 230, and then the stock trying to break out. We tested 210s, bounced off of 210s, and subsequently came up. So I put a little bit. I'm hoping that the stock will trade maybe to 220 or trade all the way back down to 210s, as I do believe that the stock will eventually come back up. So we're looking, even if we were to average in at about 220 and we were to come back, we're looking at about 20% on the money. Salesforce could do well within the year of 2021. So we could see around 20 or more percent return on that capital. And so I'm trying to average into the stock currently that's basically trading between 210 and 230. That's basically what I'm doing in terms of my risk portion of my portfolio. And so I initiated in with $500 and basically doing the same thing with BABA. So if BABA, like I said before, if Alibaba pulls back to around 250, 240, I will deploy the rest of the money that I've wanted to allocate. I want to allocate maybe, I say, between 35 and 5,000, depending upon how the stock trades. If it trades sideways around the 240s and 250s, I'll be able over time to allocate the amount of money that I'm looking for. But if it jumps right back up here into the 270s, I'll be more hesitant to add to it, because I'm trying to get the stock as cheap as possible. I wish I had a little bit more time and was paying attention to BABA before, and I think they will do quite well. China is basically, with the way things currently are, China has been doing very well, which is why I purchased it. And if I were to see a stock, for example, like Baidu pull back, or a stock like JD, I would say for those who are looking, JD looking like it's on the breakout, I may allocate some money to it. I'm not quite sure, but JD looking like it's on the breakout. We're seeing a little bit of a retest to 92s, and we're seeing the stock, and the stock basically bounced off. So JD, which is a Chinese stock, could also trade higher. Could look like it could test 100, and then basically, as you can see, the stock has been ripping. Buddy of mine at work, excuse me, buddy of mine at work bought this, and I didn't listen to him. I think he bought it down here in the 30s during the pandemic, or around here. I think he got in maybe like 30s and 40s. I never paid attention to it, and as you can see, he did very well. It was good for him. Just basically the plays that I'm doing. I did want to touch on one thing. So for this particular year, I did set goals for myself in terms of my financial goals. My goal, of course, is to live abroad in Colombia, and so basically put all my goals down on paper, what kind of finances I needed to bring in, whether I needed to do a lot of overtime at my hospital or take on another position either per diem, either at a nursing home or at another uh, hospital, and do basically like a per diem shifts to get the funds that I'm looking for. My goal, of course, is to, like I said, take my dividend portfolio to at least 500 in terms of passive dividend income, and then invest abroad in some real estate in Colombia. I'm looking to probably get around 2 or 3 small apartments that I can utilize for passive income in terms of real estate, as I do have a little bit in terms of real estate stocks, but I want to diversify my portfolio in terms of investments, not just be diversified in terms of the type of investments, but of course the country, just in case something happens in America and we experience a hard pullback. I can always go and earn some money abroad in Colombia. I do work as a nurse, and so basically I do quite a bit of overtime, especially I've laid out my goals of what I need to do in terms of overtime shifts, or in terms of basically doing per diems in another hospital or in another area. And so that's what I would recommend for all of you. Maybe you like gaming. I do like gaming. At one point, I did design and put together basically a website through, I forget the name of this company. I think it's Wisp or Wish. I forget the name of the company that I utilize. Let me see. It might be down here at the bottom. And so originally, yeah, Wix. And so originally, this was something that I wanted to do in my pastime. I got involved with gaming. And so I've seen other people who have done it in the past, where they've basically utilized gaming websites to bring in traffic. You gain ad revenue, etc. You can utilize a YouTube if that's what you're interested in. And so if you're finding yourself looking for ways to perhaps make money, one way that you could do it is to do things that you have an interest in. You could utilize a YouTube. You could create a website. Maybe you like finance and you specialize in like a particular sector, and basically you do all of your YouTube videos, and then you can create a site where you can maybe give financial advice, review individuals' portfolio. And so these are the times during hard times where maybe the industry, like for example here, where the restaurant industry has basically been decimated, and not just in New York, but in other states. But it's a good opportunity to reassess, to see where you can become skilled in a new area, or utilize your skills and to basically earn extra income. Take that income, add it into the stock market, or add it into places where you can utilize that revenue, so that one, you're not getting taxed as heavily. Dividends, of course, get taxed cheaper than my income, as well as, of course, if you were to start your own business, whether that's creating a YouTube, where you can basically limit the amount of money that goes out to the government, so that even if you're earning, if you earn, let's say 100,000 a year, but 40% of your income gets taxed, then if you earn, 60,000 a year and only 5 or 8% of your income gets taxed, but you get to set your own hours, then it might make it worth it for you to basically venture off into a different direction. That's basically my goal for the coming year of 2021. Looking, like I said, looking to take this portfolio as close to 100,000 as possible. We're sitting at almost 50,000, and of course, to have that passive income from dividends to be at least 500, with another source of income being from real estate abroad. And that's basically my goals and what I'll be doing for the next couple of weeks. As basically I'll be doing lots and lots of overtime, so forgive me if I'm not able to put out a video, but this is basically my update for now. I'll probably try to do another one at the end of the month for how much in passive income in terms of dividends that I'm basically earning. And of course, feel free to subscribe to my Twitter, where I do during the daytimes. I will, for example, post. Sometimes I can't post a video as quickly as I can post a comment, like I did when I bought IBM, or when I bought CRM. And I just basically sent out that tweet with why I was buying, where I was buying, because I might not be able to make a YouTube video until maybe a few days later, and then many of you might miss the opportunity if it was something that you were looking, of course, to get involved with as well. But that's basically going to be it for this video. A lot longer than I was hoping, But I appreciate you watching, and of course, if you like the video, feel free to hit the like button, and of course, subscribe so that you don't miss out on future content. Thanks for watching, and I'll catch you next time.